Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. Today, we're going to be discussing how you can get a small business loan, and I'll also be walking you through the process step by step. So we're going to cover different types of business loans, where to go for small business loans, what you need to qualify for these loans, how much you can qualify for, and last, what's the best way to increase your chances of approval. So without further ado, let's get right into the video. Let's begin by talking about what type of business loan would be best for you. Now, to answer that question, we need to understand the different types of loans that are available. And we're going to be starting with a term loan. Now, a term loan is a type of loan where a specific amount of money is borrowed for a fixed period of time, and the borrower repays the loan in regular installments over that term. It's essentially a lump sum of payment that you get upfront, and it accrues interest from day one, and the borrower makes payments until the loan is fully repaid. An SBA loan, or Small Business Administration loan, is a business loan that is partially guaranteed by the U.S. Small Business Administration. Now, these loans are offered by many banks and other financial institutions, and the SBA will partially cover the lender's risk in case of a default. And this guarantee makes it easier for businesses to secure funding as it reduces the lender's risk. Now, I have an entire video where I cover this type of loan. I recommend that you watch this if you want a more in-depth review. A business line of credit is a flexible financing option that allows businesses to borrow money as needed, and it's up to a predetermined limit, and you repay the borrowed amount over time. It's essentially like a revolving credit account, and it's similar to a personal credit card, but it's specifically designed for business use. I also have another video where I cover this topic as well. An equipment financing loan is a type of small business loan specifically designed to help businesses purchase, upgrade, or replace equipment. It allows your business to acquire equipment that you need without large upfront cash payment, and the equipment itself often serves as collateral for the loan, and the business makes regular payments over a set period of time. Revenue-based financing is a method where a business secures capital by promising a percentage of its future revenue to an investor or a lender. This greatly differs from a traditional loan or equity investments, as the repayment is tied directly to the business's income. It's tied to what you make, rather than a fixed interest rate or an equity stake. There are several companies that offer revenue-based financing. Recently, I did a video on the Revenue Business Credit Card Plus Flex line, and they offer a no PG Flex line and business card that's similar to this type of financing, and I'll leave a link in the description if you want to check that out as well. Microloans are small business loans that are typically under $50,000. They're designed to help small businesses access new funding. They're often offered by nonprofits or government agencies, and microloans can be a crucial source of funding for businesses that may struggle to qualify for larger loans or traditional financing. These aren't all the loans, but these are some of the most popular. And listen, each of these types of loans will have their individual pros and cons, but no matter what type of loan that you're looking for, you always want to check the terms, the fees, if they require some type of collateral, or early repayment terms, if that is applicable to you. Let's go over the pros and cons of each of these loans. As stated before, the term loan, you receive a lump sum of cash, and your repayment for the loan is a fixed monthly payment over a predetermined fixed period of time. So the pros of a business term loan are normally that they have lower interest rates, as well as a higher borrowing amount when you compare them to other types of small business loans. However, the main drawback, or the con, is that the term loan is more difficult to qualify for. These loans are based off of your personal credit score, the age of your business, and your business history. Moving on to the SBA loans. As we know, the SBA does not give these loans out. They are partially guaranteed, and the lender is actually the person that will be providing you this loan. Also, SBA loans can have a fixed or a variable interest rate, meaning the interest that you pay can stay the same, or it can go up. It could even go down. It depends on the type of SBA loan. Now, the pros of an SBA loan is that they have lower interest rates and longer repayment terms. The cons with SBA loans is that the application process can be longer. Now, personally, for me, I've been approved for a few SBA loans, and I've done this in as little as 10 days, or for some of them, it can actually take up to 90 days. So it can vary depending on the lender. Business lines of credit work like credit cards. You can borrow what you need, and let's say you have a $25,000 line of credit That means that you can borrow up to $25,000 whenever you would like. And you can think of it like your credit card limit, except you're charged interest from the day that you draw on the credit line, and you'll have to make payments based on the amount that you borrowed. Then when you pay the money back, you stop getting charged the interest. Now, the biggest pro with the business line of credit is the flexibility that you have, and it's a revolving access to funds like a credit card. You don't have to use the entire amount if you don't need it, and you can use it at your leisure. That's the best part about this. The greatest con is the fees. Sometimes you have annual fees like credit cards. You also may have draw fees and the variable interest rate, which again can go up and down. It just depends, which means it's subject to change and it can cost you more money than what you originally thought. We haven't spoken much about equipment financing in the formal sense because it can be so many different things, but this can be office furniture, computers, medical equipment, and things of that nature. The interest rate is usually fixed and the equipment becomes your collateral. It's easier to get financing for equipment that retains value. As for the pros, you get to keep more cash as opposed to paying out this big expense to purchase equipment, and you also get to own the equipment instead of renting it. As for the con, it's limited financing. You may be required to also make a down payment, but that's not always the case. Revenue-based financing has no interest rate. Instead, there's a factor rate. Once again, you can refer back to the video that I did on Revenued. I go into some detail about this. With revenue-based financing, you determine the frequency of payments and you can pay monthly, weekly, or even daily. Pros with revenue-based financing is that it's much easier to get approvals and they have very fast funding. The con is the high cost of financing, and this can vary depending on your type of business industry, how you make money, your frequency of money being made, and how much you have to actually pay for that factor rate. Last, we have microloans, and like the name would suggest, microloans are business loans that offer a smaller amount of financing. And we're talking about as low as $500 to $50,000. Some have variable rates, some have fixed rates. The pros are that you can get smaller financing amounts that larger lenders are not offering. They also can help you build your business credit. The con is that they usually have higher interest rates. There are also fewer lenders that offer microloans because they are considered higher risk. Now, I've compiled a list of places that you can go for a small business loan. There are traditional banks, there are credit unions, there are online lenders, which we haven't really covered, but I will be getting into that a little bit more. There are also SBA loans, which I have an entire guide that you can download that will show you the best SBA preferred lenders in your area, but I'll also show you how you can find this on the SBA website. Now, for traditional banks, we have Wells Fargo. They offer a business line of credit. I haven't covered this in a video yet, but I will be making a video soon about this. You can get $25,000 with no documentation for this particular business line of credit. This is available for new businesses as well as established businesses. We also have the US Bank SBA 7A and the business line of credit. They have a cash flow manager. I've been approved for both of these. Once again, up to $25,000 on that SBA 7A loan, and on the business line of credit, you can also get the exact same thing, up to $25,000 with no documentation. You won't have to present any type of financial documents, tax returns, anything like that. This is also available for a new business, but I do recommend that you have at least 6 months of age and have a business credit score generated. Now, I do have 2 separate videos addressing both of these products. If you want to see exactly how I was approved, what it took, my credit score, things like that, I recommend that you watch those videos. There's also the American Express business line of credit, once again covered in a separate video. You can get this once you have a business that has been established for 1 year. It will be based on your revenue. So you will need to link your account, your business bank account, to Plaid, and they will take a look at that. They have very easy criteria. As long as you're making $3,000 a month at least in your business, and you can keep that average balance in your business bank account, you can qualify for this, and it can go up to $250,000. So it does not take much. We also have First Citizens. They also have a business line of credit that you can qualify for. I need to cover this in a future video, and I will. That can be up to $25,000. Highly recommend that you get these guys. They're very easy to qualify for if you are a new business. Now, as far as credit unions, I have not had an easy time getting approved for business products when it comes to credit unions. Now, I have on the personal side gotten approved for many things, but on the business side, they seem to be a little more tightly strapped. Now, Navy Federal, I was approved for an equipment financing loan. That was very easy to get approved for. It did really not take very much at all. I haven't made a video about that, but I recommend that you do check that out. There is the America First term loan. I've never talked about this, but I was approved for $15,000 with America First for my business. It's very easy to get pre-approved, but this credit union is not in every single state. My recommendation is that you find your local credit union. All of the criteria will be different for you, but they vary by state, and work with them to see what business options that they have available to you. This is in Nevada, I believe Utah, California, a few other states, which is the reason why I never made a video for it. It really would not reach a majority of you. So it didn't seem like it would make much sense. However, I do understand now that locally there are plenty of different credit unions that each have their own criteria that you should check out. Navy Federal also has a business loan that is based off of collateral. It was something that I did qualify for, but I did not take just because I did not want to put up the collateral that I had. If you guys want more information about that, please drop that in the comments below. I'd be more than happy to make a video about it, but I would say that you need a very substantial amount in order to qualify for that. And I don't think that it's worth it when there's so many unsecured types of loans that you can get where you don't need to put up any collateral. Now, for online lenders, we have Revenue. That is a revenue-based financing product. We also have Biz2 Credit. I was recently pre-approved for $30,000 for a business loan with them, but it is a revenue-based financing. If you want more information about that, then I would be more than happy to make a video on it. There is also On Deck. They have a business line of credit as well. I was pre-qualified for this one for $30,000. I will make a video on this soon, but again, these do require that you show some sort of revenue. They will link to your bank account, and you will need to meet the criteria in order to be approved for these particular online lenders. Now, SBA lenders, again, I have an entire ebook that you can download for free on my website. I highly recommend that you do that to see the preferred SBA lenders. But there is a place where you could go on the SBA website and you can actually see this information. Currently, we are on the SBA website. I will leave a link in the description that you can click on and you'll be taken straight to this page. Now, how this works, if we go here, it'll show you that you describe your needs. You answer a few questions about your business in as little as 5 minutes. You will then get matched in 2 days, and you're going to get access with a curated list of lenders who expressed interest in your loan needs. Now you can talk to the lender, compare rates and terms and more, and you can apply for a loan. So if this would interest you, then link is in the description. I highly recommend that you use this and also download that SBA Lender Preferred Guide from my website. So what do you need to qualify for a small business loan? Well, it depends on what you're looking for, but I'm going to give you a general guideline for the requirements. Now, all loan types will take your credit score into consideration. There is absolutely no way around that. You will need at least a 680 plus credit score. You won't need collateral for term loans or business lines of credit for the most part. You normally won't need this for microloans. However, some lenders, they may ask for collateral, or sometimes you can offer collateral to increase your odds of approval or lowering your interest rate. So I would just have collateral ready just in case, because you never know. Generally, your business will need to be 12 months or older. In my case, I have gotten approved for many loans in many business lines of credit without having a business open for 12 months. However, these are general guidelines, all right? So there are options without meeting this requirement, but we want to just give a general idea of what you need. Now, revenue is required for a lot of loans. They want to see that you've actually had at least 90 days of bank statements with some revenue. The one thing that I would recommend is that you don't want to have business bank statements that show that you ever had a negative balance or a zero balance. In the last 90 days, you want to show that you had a great average, maybe around $20,000 or more. And you also want to show money that came in. That is really it. For a lot of loans where you do need to qualify and show financial documentation, besides tax returns, you can really just get away with if you have a certain amount of money sitting in your account and you sat it there for 90 days with maybe adding on and taking out some for some business expenses. That pretty much will do it, guys. If you can get that, you'll qualify for a lot. Now, once again, these are just general guidelines. I've talked about SBA loans in great detail where there are some other stipulations that you will need to meet. I've talked about business lines of credit. I've talked about revenue-based financing. You know, there are different criteria for each of these. But again, these are just general guidelines. Now, I'm sure most of you are wondering, how much do you actually qualify for? And I'm just going to give you my honest opinion on this. It depends on a number of variables. It depends on your cash flow. It depends on your time in business. It depends on the industry that you're in. It depends on your credit score, and it depends on the type of loan. So the answer is that this can be different for everyone depending on these factors. But this is what I've seen. How much revenue you qualify for depends on how much revenue you're bringing in. So if you wanted to qualify for, let's say, a $30,000 small business loan, in my experience, it seems as if you need to make 4 or 5 times that amount. Okay. And normally you have to prove it with bank statements, tax returns, or profit and loss statements. But I will give you a tip. If you're requesting $25,000 or less for most business lines of credit, microloans, and business term loans, you're less likely to be subjected to a financial review. So if you stay within that range, you will be good for the most part. Now, if you want to know how to increase your chances of approval for the funding amount, you can start with larger banks in the beginning. But if you get rejected, try a small bank, try a credit union, or try online lenders. That will greatly increase your chances of approval. Online lenders are growing in popularity, and I think that I'm going to start covering a few of them here soon. But in 2019, 19% of all small business approvals came from online lenders. And in 2025, 25% of all small businesses were approved from online lenders. And of course, if you go with this option, make sure that they're offering you the best interest rate, the best terms, which will best suit your personal and business needs. And the last thing is, the reason why anyone gets denied for business loans comes down to a few simple things. So guys, no matter who's watching this, if you are denied, I can almost guarantee it's for one of these things. It's either you don't have a high enough credit score, you have a lack of cash flow in your business, or you have a lack of business history. It's really those 3 things. That is the only 3 things that it ever comes down to. If you improve your credit score, you request a loan amount that aligns with your revenue and what you can actually prove, and you also have at least 6 months under your belt or more business history, as well as a business credit score, then more than likely you'll be approved in most occasions. Now, thank you guys so much for watching this video. If you have any specific questions on, let's say, a lender or a credit union or any of the banks that I mentioned, please drop that in the comments below. If there's anything that I have not made a video on as far as small business lending that you would like me to test or try or look into, I'd be more than happy to do that. Just drop that in the comments below. But you just want to keep in mind all the data points that I mentioned at the end: the revenue, cash flow, your credit score, and business history as far as length of time in business and your business credit. Those are the things that will either get you approved or denied. It's very, very simple. If you don't have those things, don't worry about it. Follow all of the videos I have on this channel. I have an entire business credit playlist. If you don't know how to build business credit, I show you how to build business credit. If you don't know how to incorporate, I show you how to incorporate. If you need to do credit repair and you need tips on that, I have videos on that. Anything that you would like to do, there's a video I have that's covered that will show you how to do it. So there's nothing that you can't do. It might take time. It takes some work. It'll take some effort on your part. And the main thing is you should be trying to get a cash flowing business. Your first thought should not be, how can I borrow money in order to start making money? Your first thought should be, I need to make a cash flowing business. And then once I actually make some income, how can I scale this up to then make 10x or 5x what I'm currently making now? That's the way that you should be using these loans, these lines of credit, and things like that, unless the loan is otherwise stated for a brand new startup and you're using that capital in that manner. Once again, I highly recommend only borrowing money in industries that you have experience in. If you don't, gain experience, learn that industry. You need to learn how to make a dollar out of 15 cents. And if you can do that when you get business funding, the sky will be the limit for you because you understand how to make money, and giving you more money, or that type of person who's learned their industry, will just greatly increase what they're already making. And it's going to make you very successful. Once again, thank you so much for watching this video, and you guys have a wonderful day.